Ladies and gentlemen, good morning and welcome to the Mallcom India Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, Ms. Jain.
Good morning, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Mallcom India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third and 9-month ended of the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decision. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Rohit Mal, General Manager, and Mr. Shyam Sundar Agarwal, Chief Financial Officer. Without any further delay, I request Mr. Rohit Mal to give his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi. Good morning, everybody. It is a pleasure to welcome you to our earnings conference call for the third quarter and 9 months ended of the financial year 2023. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company. Mallcom India Limited is a 4-decade-old company and India's largest manufacturer and distributor of personal protective equipment. It provides a one-stop solution for manufacturing one of the widest range of head-to-toe PPE. The company is also one of the largest exporters of PPE from India, exporting to over 55 countries across 6 continents. We have an expansive manufacturing footprint with 13 production facilities spread across India. Over the years, we have focused on backward integrating wherever possible, resulting in significant cost savings and gradual margin expansion. Our integrated manufacturing facilities module, assemble, customize, and package the different head, body, hand, and feet protection products. Each of our facilities has in-house labs that perform safety testing and ensure compliance with international quality right through the production cycle. Now, I will request Mr. Shyam Agarwal, our CFO, to brief you on the company's financial performance, after which I will brief you on the operational highlights.
Thank you, Rohit, and good morning, everyone. Let me first brief you on the consolidated financial performance of the third quarter of the financial year 2023. On a consolidated basis, operating revenue was around rupees 100 crores, which grew by approximately 8% year-on-year. The third quarter is usually a lean season, and it was also a result of the extended monsoon season and festive season in India as well as around the world. EBITDA improved and stood at around rupees 14 crores, witnessing a growth of 13% year-on-year. EBITDA margin stood at around 14.43%. EBITDA margin improved in quarter 3 FY23 due to higher sales realization and cost optimization. Net profit reported was about 11 crores, which grew by approximately 40% year-on-year. PAT margin stood at 10.82%. For the 9 months under review, we reported consolidated operating revenue of around rupees 298 crores, which grew by roughly 90% year-on-year. EBITDA was reported at around rupees 42 crores, which grew by 17% year-on-year. EBITDA margin stood at 14.04%. Net profit was reported around 27 crores, witnessing a growth of 22% year-on-year. PAT margin stood at 9.13%. Now I would request Mr. Rohit Mal to explain the operational highlights for the quarter and 9 months.
I'm happy to announce that during the quarter, we were awarded status certificate of 3-star export house by the Director General of Foreign Trade, Government of India, a significant over the earlier status of 2-star export house. We also received the statutory approval for amalgamation of the 100% subsidiary company Best Safety Private Limited, which will result in better synergy and cost efficiency in operations, leading to better margins for the product segment. There has been a significant increase in productivity and shipment from subsidiary company Mallcom Safety Private Limited, with operational efficiency now almost at 75%, which should result in higher volumes and earnings in the future. We have also been allotted a land parcel of 50,000 square meters by Gujarat Industrial Development Corporation at Sanand 2, which we plan to utilize for our future expansion plans in due course. Lastly, the expansion project at Ghatapukur, West Bengal is now nearing its first phase of completion, with facilities ready to use and should be contributing more to the Concall level of operations. Thank you. With this, we can now open the floor to question and answer session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, Rohit. Congratulations for a decent set of numbers. The first question I have is, so I think you mentioned in your operational highlights that Ahmedabad facility is now operational and the efficiency is growing in, and also Ghatapukur expansion is completed. So we grew this year our revenue by I think 17-18%. So with both these facilities kicking in, how do you look at growth for FY24? And second question is on margins. So I think we did very decently on margins also. With scale coming in and the operational efficiency flowing in the subsidiary, do we expect margin to improve from here?
Thanks, Sunil. I'll address the growth question, and I'll ask Mr. Shyam to address the margin question. Let me just clear for the Ghatapukur project that we've also mentioned in our previous calls, that it is not only an expansion, it is kind of a shifting of capacity from our existing facility to a newer facility. So we'll not yet see the expansion. The expansion will come gradually from that facility. For the Ahmedabad facility, definitely that's an expansion, and we're looking and only that is only for workwear. So we are doing 19-20% right now, and that's something that we are expecting going ahead as well, because the market also needs to react in a similar manner, which we see more or less that it's doing. So I think the growth will be on similar lines that we are experiencing right now.
Yeah, okay. Just to add on to the Rohit replied, in case of Ahmedabad facility, yes, the turnover we see it would be improving. We project to close this year by around 20 crore for the year, and next year target from this unit should be minimum 30 crore. And in case of Ghatapukur, yes, we have it is mix of setting of facility and adding to the capacity. So this year hardly there would be increase, but definitely in FY24 we should have additional turnover from this unit also. And talking of margins, yes, there is operational efficiency coming in with the increased volume also. And so the margins, EBITDA is in the range of 14 to 14.50%. And as you will see that product mix also is changing. So more of safety shoes and garment, which is value-added product, which we are doing. So we expect to maintain this margin range minimum, and we would like definitely to see that it improves.
Okay. And if I can ask one more question. Rohit, if you can talk about the demand environment both on domestic and export side. And also, I think, this Australian treaty is now operational. So any benefits that we see kind of, first signs of that kind of helping us in terms of tapping Australian market? You can talk about that.
Okay. So for international demand, to be honest, last 6 months have been a little sluggish. We've seen the effects of Ukraine-Russia war, the effects of higher energy prices, and winter and festivities coming in. So there's, talks of recession or probably actual recession there. So that has been a little sluggish that we have seen. But we expect it to improve in the next FY. However, for the domestic market, the demand has been good, as we've seen across manufacturing indexes also improve. So the demand has been strong and consistent, and that's where our focus is also to increase our share from the domestic market. So that's the international domestic demand. And with respect to Australia FTA, yes, that's been signed and implemented, and now we are shipping most of our products duty-free to Australia. We are planning to increase our footprint in the Australia and New Zealand markets, and in fact, we are traveling in the coming days to do some business development from that market, and expect to gain some more market share in that market.
Okay. Just one clarification. You said similar growth of 17-18% at the company level is what we are targeting for FY24, right?
Yeah, I think it's a similar growth level. That's what we expect.
Okay, great. Thanks. I have more questions, but I'll come back to the queue.
Thank you. Our next question comes from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity, and congratulations for decent set of numbers. Rohit, just wanted to understand, we have safety shoes segment, garment segment, and hand protection glove segment, largely 3 divisions that we focus on. With the kind of growth, with the kind of orders we have in hand, how do you see this mix changing over the next 2-3 years? Will it remain same or will it change? And in pecking order, if you can talk about how is the margin differential between the 3 segments?
So in terms of product mix, I don't see it changing a lot. Only thing is we are trying to add the head protection segment also, which is almost negligible right now, but we plan to increase some share from that mix. But I don't see these. That's why we are a one-stop solution. So we are trying to have all of them. If you see, almost 33%, and that's what we had. So if the helmet comes into picture, maybe 5-10 years, we'll see 25 from all of the 4 segments. So that's what we are aiming at. With respect to margin, it's more of a. It's not just product segment wise what's our margin. It also depends on the product segment is being sold in India or outside. So the brand plays a role to improve margin. So leather glove, which is a lot of it is commodity, can be a very less margin product outside, but it can be still decent margin product in India. But overall, I think the margin is more toward the margins are higher towards workwear, safety shoes and nitrile gloves, which are more value-added products and more customized products.
Sure. So let's say that the leather gloves part will be a relatively less margin product in our overall product basket, is what you can say.
Right.
And how much will that be contributing overall to our sales or in hand protection segment?
Shyamji, if you have the number.
Yeah, will you please repeat the question?
Yeah, how much is leather gloves contributing to our overall sales?
So I just wanted to clarify that in the hand segment, what we see now that instead of leather gloves, the percentage of sales will be rising. So going forward,
Okay.
so that is one, age of now, it is around 20% of, our
Sales.
overall turnover, leather gloves, which should be shrinking going forward. Yeah.
Sure. Okay. And Rohit, in our earlier calls and as per our discussion, we have seen that you have highlighted that in garments also there are certain products, fire retardant products and all in the garment which are extremely high margin. So do you think how much is the proportion for relatively high margin product in the garment segment, and what is our and do we have plans to expand this capacity further, and how do you see this segment going for us over the next 2-3 years?
So I would say FR and all these specialized garments is still 10-20% of the total garment turnover.
Sure.
But we are that's an area where we are focusing on more, so that we increase mix from these segments more. And also, China has been predominantly the market leader in these segments. So we are trying to get that market from there. But however, it requires a lot of raw material being made in India, which still, India is far behind China, because a lot of fabrics are not being consistently being made in India. So we are regularly working with the mills to ensure that we have the fabrics from India, and that's when we can be more worthy in the international market. So it's a long game, I would say, and we need to have the entire supply chain in India to be able to make a real dent in this particular segment. But we are trying nevertheless from imported fabrics, from local fabrics, to ensure more value-added products in our workwear segment.
Sure. And in terms of expansion, I think Mallcom Safety also had some phase 2 expansion at the Ahmedabad facility. So what if you can talk about how much will be the expansion and how much can be the revenue generated from the second phase? And Ghatakpur also had second phase of expansion, if I'm not wrong. So what are our plans for that, and how much will be the capital outlay on that, and what can be the asset turns for both these projects?
Yes, Shyamji, if you could answer.
Yeah, so in case of Mallcom Safety, as we mentioned that now the productivity level is around 75%, and with the existing facility only with target at least 30 crore turnover in next financial year. And further expansion in this unit, that is possible. As per requirement we can do, because the infrastructure is ready, and only we put to install the machinery, which can be done anytime. So as per requirement we will be doing that. And Ghatakpur first phase is over, so now we are building up the garmenting facility there, some knitted gloves facility there, some helmet facility is there, and we plan to add on further capacity which will be happening in next year also. So there would be additional turnover coming from there. And for the expansion in Gujarat, as we mentioned, we have got allotment of land from DIDC in Sanand 2, and that is in Mallcom India Limited. And there we plan to to have factory manufacturing mainly synthetic gloves and other PP items, which we target mostly for local markets. So that is something will be happening in Mallcom India Limited.
So Ghatakpur second phase expansion and Sanand expansion in our Mallcom India Limited will be happening over next year is what you're saying.
Second phase, Cuttack 4 is not yet planned,
Okay.
but Sanand 2 we have planned. Yeah, it starts from, we get the land by March, and then next year we will be constructing the factory there also.
Is it expected to be completed, and how much capex are we putting in?
Yeah, it is around the total project is, in first phase we have a total capex plan of 60 crores, 20 crore goes into land right now, and then we will have building and machinery there installed over the next 3 to 4 years time.
Okay, 60 crore is spread over 3-4 phases, or in first phase itself will be doing 60 crore?
Yes.
No, 60 crore will be spread across 2-3 phases, or in first phase itself will be doing 60 crore?
Yeah, it is within the first phase only. First phase is spreading over 4 to 5 years. Yes.
Okay. And how much revenue can we generate from this Sanand facility?
Pardon?
How much revenue can we generate from Sanand facility?
Target 100 crore turnover from this unit.
Sure. Okay. Thank you, and wish you all the best.
Thank you. Our next question comes from the line of Aditya Pal from Motilal Oswal Financial Services. Please go ahead.
Hello, sir. Congratulations on a strong set of numbers. So just wanted a picture on manufacturing and other operating expenses. It's consistently falling down over the last 4 quarters. What are we doing right, and where do we see this stabilizing at? So when I say it's falling down, I'm saying as a percentage of revenue.
Yeah, so basically, this segment included the freight also, selling expenses. So in the past, the freight had gone up almost 4 to 5 times of the normal freight. So this is the now you see that export freights, ocean freights, and air freights are coming down, and that is reflected there. So a major saving on the cost of freight.
And so, as a portion of revenue, where do we see it being stabilized at 17%, 16%? If you can just put some color on it.
On what?
On the manufacturing and other operating expenses. So where do you see it?
It should be in the range of 17 to 19%. Yeah. So as of now, I think it is 17%. So yes. So I think that is the range between which, because something which is flexible like selling expenses, which keep changing. Otherwise, so that is the range we normally see.
And also, the cost of material consumed is or has experienced a lot of volatility. It goes from right up to 58% in December, and last quarter it was close to 49%. So are we trying to get into long-term contracts with our vendors so that this stabilizes in the future?
No, that is not the case. You just look at the total cost, including the finished goods, the change in stock, and it is coming to around 60-61% only. So you need to look at the numbers both taken together. So maybe there is more of finished goods and less of raw material consumed. So that might be happening. But overall cost to sales is in the range of 60-61% only.
All right. Thank you.
Thank you. Our next question comes from the line of Alisha Mavla from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for taking my question. I'm fairly new to the company, so some of these questions may probably have been answered. Firstly, just wanted to understand the West Bengal facility that has come on stream. How much capex have we spent on it? And you did mention that some of the existing capacity is there. So how much incremental revenue are we expecting? You did mention that we're expecting some in 24, or maybe what is the peak revenue we can do from this facility?
So see, basically, we have invested here in infrastructure. So we have almost 2 lakh square feet of building constructed, which is ready to use. And in our type of garmenting activity, you need space. So this is something which we have done. We have invested almost 30 crores in this project, and the building construction is one thing. and then we have add up some machineries also. So going forward, we have see normal age of now we are doing around 100 crore of garment turnover. We would like to double it with the added capacity also. So immediately we have shifted the existing facility from the existing plant to this place and some added capacity also. But we need to add more there, and it will be gradual. And ultimate target is that we should have around double turnover what we are doing now. So 100 crore to 200 crore.
So if I've understood correctly, we spend 30 crores. This is giving us 100 crore of revenue. We will do some kind of capex, which will be phase 2, which will help us double this revenue.
Yeah, so for doing that, if you want to increase the turnover to productivity, the machinery is something where you need least capital. So in the garmenting at least, you need to have basic infrastructure ready. So the basic infrastructure and machinery also is ready. To increase the turnover, now we need to put some additional machineries only, which will be costing not much, maybe 5-10 crores max, so up to 5 crores. So that we will be doing in due course of time. It's for requirement.
So that's what I'm asking, that this will be the phase 2 expansion that you were referring to earlier in this call.
Yeah, it will be within phase 1 only. So phase 1 is almost complete, and we add on some capacity there as per requirement to double the turnover, and it will be hardly, capacity would be in the range of 5 CR maximum.
Understood. And then we also mentioned that we had some capacity in Ahmedabad that has come on stream. So when has that come on stream, and how much capex have we incurred over there, and what is the revenue we can do there?
Yes, so we have a total investment of around 25 CR in this unit, and capex is around 18 CR. And this year we target 20 CR turnover, next year 30 CR as of now, and we'll see how. So again, same thing, there also we can expand the capacity easily and as per requirement. So we project age on date is we project 30 CR from next year.
Understood. And what is the split of revenues between domestic and exports?
So basically, domestic, we are selling under our own brand, and the domestic is a local market, and export is basically OEM, and it goes to the entire world. So it is around, for the quarter, it is 40-60 now.
40 domestic, 60 exports.
Yes, yes.
And in exports also, Europe and Asia would contribute bulk of it.
Yes. Almost 42% of our turnover is coming from Europe.
And at the start of the call, we mentioned that there was some sluggishness in the international demand. Were we talking specifically for Europe, or are we saying for all the markets that we're catering to?
Yeah, it's Europe, and also sluggishness only because of this quarter. Traditionally, this quarter you will see that there are a lot of holidays overseas also, Christmas season, and so that's why the turnover for the quarter remains a bit on the 4 to 5% on the lower side. Otherwise, yes, in Europe we see, as Rohit mentioned, that we see some, certain.
Understood. So my last question is that, like you mentioned, that 42% revenue is coming from Europe, and at least in the near term there is some amount of slowdown, but we're continuing to target high double-digit growth. So which market or which segment is going to contribute to incremental growth to compensate for Europe? Because that's 42% of revenue.
Rohit, you can answer.
So you see, South America is a decently big market for us, and there have been some embargoes on anti-dumping duties on China in Peru specifically. So that has opened up a big market for us. US has not been a really big market for us, and we are trying to make efforts to make dents there, and so US is a big market that we are targeting, and with the FTA now, Australia, New Zealand is also a big market. We already have customers, and we are trying to drill it down further. So even in Europe, those who want to move out of China or other Asian countries and move towards India to reduce their country risk, we are targeting those kind of players. So it's more about opening new accounts as a development from same market and opening newer geographies.
Great. Thanks for the detailed answer. Just one follow-up. So we expect the split to be 40/60 only. The incremental growth will come from the export market only.
The split right now, yes, near term should be 60/40, but eventually our target is to make this split 50/50.
Great. Thank you so much and best of luck.
Thank you. Our next question comes from the line of Pinaki Banerjee from Aum Capital Private Limited. Please go ahead.
Yeah. Good morning, sir, and thanks for taking my question. So my first question is, what is the amount of debt and cash you have in your books right now? And for further capacity expansion, are you going to undertake any further debt on your books?
So we presently have around 70 CR in our cash and or cash equivalents, and almost around 60 CR debt. So
okay.
And what was your next question?
Sir, for your further expansion plans, are you planning to undertake any further debt?
No. So what we are doing, you will see that whatever investment we are doing, we are planning it in a way that whatever cash we generate, it covers our requirement. So whatever we have done in past or doing now or for future also, we will have enough cash generation, and we don't plan to borrow anything for our expansion plan as of now.
Okay. So what is your working capital days at present now?
Pardon?
The working capital days, can you just give an idea?
Working capital would be around 120 days almost. Yeah.
Okay, sir. Then my final question regarding this, the budget which given by, apart from the capital infrastructure outlay by the government of India, and what is your net take on the budget? Has it been positive for you?
Yeah, it should be positive. See, the budget is growth oriented, and there would be a lot of capex happening, and
Okay.
we are directly related to that. So if the investment activities goes on and infrastructure development happens,
Okay.
in that case definitely we are going to benefit.
Okay, sir. So that's all from my end. Thank you, sir.
Thank you. Our next question comes from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
Sir, I hope I'm audible. Hello.
Yes, go on.
Yeah. Hi, Rohit. Hi, Agarwalji. Sir, I have 2-3 questions.
You are not available now.
Is this better?
Yeah.
Yeah. So I was asking.
It's not clear. Voice is not clear. Sorry.
Hello.
Hello.
Yeah.
No, Ayush, I think your voice is breaking.
Okay. I'll come back in the queue. No.
Thank you. Our next question comes from the line of Zaki Nazar from Nazar Investments. Please go ahead.
Sir, good morning and congratulations on a very strong set of numbers. Rohitji, a few weeks back, Ajayji was was in one of the magazines I've read that he foresees Mallcom as a 1,000 crore company in 5 years. How do you foresee this panning out, and when that happens, how do you foresee the divisions of the company doing? That is my question number one. And my question number two is, sir, you indicated a growth of 18 to 20% for next year. That would be over March 23, correct, sir? Thank you.
So first question, 1,000 crores in 5 years. Yeah, we are gearing up for that. So you see a lot of capital expenditure that we are doing, and that's to ensure that we achieve this revenue. And for the product split, like I said, we want to focus on each product individually and ensure that the split remains the same, or if a new category is introduced, then we go for a four-way split. But that will take some time. The idea is to become a one-stop solution for the domestic as well as the international market for head, hand, body, and feet protection. So that's where our focus will lie. And the 18-20%, that's for like FY23, yeah, probably we'll be having that, but we're also wanting to continue it for the next year, which is FY24.
Yeah, because FY23 you might not have 18%, sir. It will be slightly, I think, the way things are.
For the full year, it would be on the it's in the range of 10 to 15%, definitely.
Yes. So next year you would definitely be looking at 15% plus growth, sir.
Ideally, that's what at least we are targeting.
And Rohitji, see, out of whatever top line we do, maybe 23 or 24, what percentage of that would be sold Mallcom owned brands, and what percentage would be a third party brand, sir?
So, like we said earlier, it's close to 40%, less than 40% right now, 37, 36%. I think for this year, that's where we'll be ending at, where 63% maybe from non-branded and like third-party branded, and from almost 37, 38% from branded products. We would, in the future, would want to increase the share from our own branded products and eventually make it at least 50-50.
Thanks a lot, sir. Best wishes for the years to come. Thank you.
Thank you. Our next question comes from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, Rohit. Thanks for opportunity again. So, slightly broader question, but so what I wanted to understand is that, how do we intend to scale up our operations or business in market? And, how does a typical, product flow happens through the supply chain? And you also mentioned plan to enter into the head protection segment where our presence is pretty small, or you want to scale up. So, what are the entry barriers? How difficult or easy it is to crack that segment? And there are already players like Karam who are pretty dominant in that space. So, how do we compete and gain our presence there? If you can talk about that.
Right. To ensure growth, like we said, we are ensuring firstly that we have capacities. So for international players, capacity is a challenge. They're looking for capacity, especially if they're moving out of places like China, looking at massive capacities. So that's one thing that we are addressing. On our end, we are doing R&D of products. So we are launching new products every season to ensure that we are up to date with the market. We are investing in testing facilities as per global norms for Europe, for US, for India. That's something that we are ensuring. And we are putting efforts towards our brand and our sales team. So we are hiring salespeople, and we are ensuring that we are paying attention towards our branding activities. These are some of the things that we are doing to ensure that we are able to scale up our operations. And with respect to head protection, so we currently we started with one helmet design. We now have two, and we are hoping to have more designs, coming next year. So that's one of the ways. So we are increasing our range of products, range of offering, basket of offering in that product category. And this typically helmet is again a very commodity product, and so we are ensuring that we are able to push it properly through our sales channel and our dealer network. We already have 75 odd dealers, so we are who are taking our products. So we just need to place the right product with them, and we expect it to sell. Similarly, for masks, we had one design. Now we have a couple of designs, and same case for bum caps. So across in the product basket, we are trying to increase our offering and trying to become a one-stop player because we already have a footprint with the other categories. So we are expecting to cross-sell our products in the head protection division.
Okay. Just one follow-up on that. So currently you said we have around 75 dealers, right? So for us to grow significantly, let's say over next 3-4 years, do we need to increase our dealers? And if so, what is the addition that we are targeting? That is one. And second is on product development side, if you can elaborate what kind of team we have, what's the number of SKUs we have, and in the entire basket, any gaps that we see today compared to some of the larger peers?
So dealers, yes, we're regularly adding. We have now covered, I think, almost all Indian states. Now we are adding more dealers outside India. So we have dealers in Nepal, Bhutan, Bangladesh, Vietnam, Singapore, Thailand, UAE. So outside India, Southeast Asia, Middle East is also where we are increasing our dealer base. I don't have an exact number of where we want to reach, but more than the number, it's important that we are able to cover the market well. And with respect to product development, we have category managers and we have product development team specific to each category. Now, in some cases, the products talk to each other also. So that's where the role of product manager or category manager comes into picture. In terms of SKU, there'll be more than 500 SKUs because we are a OEM, so we develop products as per the customer's requirements. So every day we have a new requirement, and that builds a new SKU for us. So it's difficult to define that in numbers, how many SKUs we'll have. And with respect to, sorry, I missed your last question.
Yeah, so last question, do we see any gap, white spaces in our product basket which we think should be filled, and are we working towards that?
Right. So head protection was one of the missing links that we are trying to address, like I said, with more variety of helmets, masks, arm caps, etc. And in synthetic gloves also now, we are doing nitrile. There's demand of other synthetic gloves also, which we are trying to address. Maybe in a couple of years, we'll be having some other synthetic gloves in our portfolio also.
Okay, got it. Thanks. Very useful. Thanks. All the best.
Thank you. Our next question comes from the line of Sanjay Shah from KSA Securities Private Limited. Please go ahead.
Yeah. Hi, Rohit. My major questions have been answered, but I would even like to understand from you about the government regulations on this PPE side. Is there any change you foresee on the government side to make these norms a bit stricter than what it is right now?
Right. Yes, the government is working towards it. In fact, there are talks of a new, completely revised and updated labor laws, which will put more emphasis on occupational safety and health. So that's an expectation from the government that we have, and hopefully the government is working towards it. On the other hand, there's BIS in India, which is ensuring that the products meet a certain specification and standard. So there is now government is pushing more towards having certified products. They're doing market testing also. They're taking our and I'm sure other samples from the market and testing it. So there has been push by the government, and there has also been push by some of the larger players and MNCs in India who would like to have a standard which is comparable to their global standard. So definitely there's been a push from the government, but yes, we are expecting more on it.
So that will give a more opportunity to grow a business domestically because it is more dominated by unorganized player, correct?
Right, yeah.
Thank you. Thanks for answering. Good luck to you all.
Thank you. Our next question comes from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, one question is, can you please comment on the seasonality of the business, as in how quarters shape up?
So I think the only thing which is seasonal here is leather gloves, especially for the export market, because during the monsoon there's a dip because of humidity in the containers. And otherwise, third quarter is historically a little lean because of all the festivities and holidays, etc. And fourth quarter usually is a strong quarter for us. But I don't think that's because of the seasonality of the product. I think it's more so because of the cycle of the business of the manufacturers.
Sure, sir. And did you say that there was some postponement of orders from this Q3 to Q4, so some amount?
Yes, there have been some, like I said, especially from the Europe market, there where we saw some sluggishness. So in some cases, yes, we've been asked to, put it on hold, or because deliveries have been a little delayed. But that's not a usual occurrence. I think that has happened only this time for a special case.
So would you be able to comment on the amount of the same?
I don't have an exact number for you at this minute.
Yeah, it would be hardly in the range of 2 to 3% max.
Okay. And in terms of manufacturing and other operational expense in the company's numbers, we are seeing a dip there. So is it because of freight cost, or there are other things also which are causing that?
It is mostly due to freight cost.
So we expect this low number to continue because freights have come down.
Yes, definitely.
And sir, for this year, we're saying around 10 to 12% growth rate, but we are expecting much better numbers for next year. So what is the change in view? Why are we expecting much better numbers next year?
Because see, as we mentioned, the effort is there. We have already set up the facilities. Now we used to utilize that, and we are also exploring new markets, and the sales effort is there. And so you need to have some targets which you would like to achieve with all this preparedness.
Sure, sir. Thank you and all the best.
Thank you. Our next question comes from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my question. Sir, as I understand, we are basically in an industry where the unorganized sector has got majority. So can you just give some rough idea what percentage of unorganized sector is business they are doing and organized sector we are doing?
In India, I think it's a good estimate to say that almost half of the entire sector is unorganized.
Okay, and what are the raw material which plays a major part in this industry?
So there's not one raw material, depends on the kind of product, because we are in a variety of products. So we have different raw materials. One is, your fabrics, yarns. One is leather. One is synthetics like chemical like PU or nitrile. So these are some of the major raw materials.
And last question, who is the competitor in this industry in organized sector?
In organized, you have a couple of players. So listed players, there are some which are like Arvind is there, Bata with their shoes, Liberty with their shoes, and some other overall players like Karam and all which are there. There's Alan Cooper, which is also there for the footwear.
And also ethnic industry?
Acnet is also there.
Okay. Thank you. That's all from my side.
Thank you. Our next question comes from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
Hi, Rohit. I hope I'm audible this time.
Yeah.
Great. So I wanted to understand more on our garment capacity. Last year, it was 2.2 million, which in this presentation it is mentioned as 3.6. So how much of it was added in Ahmedabad?
Ahmedabad, I would say about we are expecting
3 lakh pieces, Rohit, from there as of now.
As of now, 3 lakh pieces.
Yeah.
Okay.
So rest of it would be expanded in Kolkata itself then?
Yeah.
Yes.
Okay. So does this include Ghatakpur as well? Because I was in the impression that we have shifted facilities from the Science City facility to Ghatakpur.
Not completely. So the Science City facility is continuing, and some of the facility we have shifted and some added also.
Okay. So a follow-up on this would be then, in the next 1 to 2 years, where do you see this 3.6 number going to?
3.6 is already a good number that we are targeting. So I think if we are in 1 to 2 years, I don't see that moving a lot.
Understood.
Up to 4 million.
Yeah.
Understood. Okay. So with the freed up facility in Science City, what do we plan to do there?
Sorry, can you repeat?
So we have some facility that would be freed up in Science City facility, right? Because we have shifted machinery to Ghatakpur. So what do we plan to do in the Science City facility with the free space available now?
We don't plan to do anything there. That facility is in the middle of the city. So
right.
It's something difficult to operate there anyway because of big cargo movements and everything. So we don't plan to do anything in that facility.
Understood. Okay. Fair enough. My next question is on our shoes. We don't see a significant expansion here or expansion at all, which is a very profitable segment. And if I understand it correctly, it has been running at high utilization for the last 1 year. So what are our plans to, expand in the shoe area? Because we are really, that's a good business for us.
So shoe, we are investing in newer types of designs and molds. That's a big capex for shoe. That's what we are doing, and we're trying to gain more market share in the international market. We've been a relatively good tech market. We plan to replicate that in the international market. So you won't see the capacity maybe increasing, but more variety and more variation and addition to the product basket is what we are doing in shoes.
So Rohit, for capacity also in safety shoes, yes, we are planning how to increase the productivity, and that is possible within the infrastructure which we have. So it can be increased as per requirement by change of shift also sometimes, and creating some space. So for example, we have created some additional space for shoe manufacturing in Kolkata, where we have shifted our knitted operations, knitted glass operations to Ghatakpur facility. So these are the things we are doing, and whatever requirement is there in future, we with the existing setup we can do that. We can cover that.
Understood. Will be expanding in synthetic gloves.
Ayush, your voice again broke. Repeat.
Am I audible now?
Yeah.
Yeah. So I was saying that in the new Ahmedabad land, where we plan to do a 60 crore capex, you mentioned that you will be expanding into synthetic gloves and some other category as well. So if you can help us, understand better what kind of product categories, and because Synthetic gloves, are these the ones which are value added? Are these high margin products? Because we don't see gloves as a very high margin product. So why are we thinking of expanding in low margin product category in a new facility? So something around that will be helpful.
No, so basically, as we mentioned that this unit will be primarily catering to local market, and synthetic gloves is certainly not low margin business, because you need investment, you need technology, and what we see that in a domestic market at least there is now a change, and market started accepting this type of products, and just like this will be another segment where you will have decent volume and growth. So moving from feet safety to hand safety now, and these are the products more suitable for Indian market. So this remains one of our product category which we plan to invest. Then helmet also, and some head protection items also we plan to do there. And so this is we think that it is needed, and to take care of my domestic requirement, we need to invest there.
Yeah, just to add on here, so we are adding in synthetic gloves, we are adding both value-added items there as well as commodity items there, because again, if the objective is to become a one-stop player for the domestic as well as international market, we need to have everything in our kitty, and that helps us cross-sell our products, and that also helps us retain our customers. So that's what we are trying to achieve from this new unit, and with the different synthetic gloves that we'll be making out of there.
Understood. That was helpful. Thank you for answering the question.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session. I now hand the conference over to the management from Mallcom India Limited for closing comments.
Thank you all for participating in this earnings phone call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relation managers at Valorum Advisors. Thank you. Stay safe and stay healthy.
Thank you, sir. On behalf of Mallcom India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.